What's up guys? So in this video I'm going to be showing you guys how to confirm narrative with drivers. This is very important in my trading, so let's go ahead and get into it. Now I have a bunch of slides created here. It's going to be a long video for sure. If you guys like these slides and like the way this video is presented, I can do the same thing in my future videos. Just let me know what y'all think. Now let's go ahead and start. So the first thing is we must start with the economic calendar, right? And it's very important that you understand, the market that you're trading and what actually affects that market. So if you're a forex trader, you're going to look within the currency pair. Obviously, a currency pair is just two currencies, right? Made up of two currencies valued against each other. So, for example, if you're trading GBP USD, you're only concerned with GBP and USD red folder news events. Now, if you're gonna trade GJ or something, GBP JPY, you'd be looking at GBP JPY red folder, right? Now, one thing I will say, I don't trade forex, but I have noticed that USD, right, the large news events, I feel like they affect almost all the currencies. I feel like I've even seen it affect like GJ. It's pretty weird. So y'all gonna have to do some testing on y'all's own there, but I am pretty well versed in these three markets, especially indices. So within the indices markets, I'm referring to NQ, ES, and YM as the triad here, right? If I was trading forex, I would be looking at DXY, EU, and GU, right? These are three correlated markets in the same asset class. So here's the same asset class, three correlated markets in there. So this is what I'm referring to within SMT, right? In gold, I'm referring to gold, silver, euro, or XAU euro as the three correlated markets in this asset class, and then this is for oil, right? So it's pretty important to understand what affects that asset class. So obviously USD red folder affects indices, and then 9:30 New York Stock Exchange open every single day. Now this 9:30 open is only specific to indices only. I see a lot of people use it on gold or oil or even forex. It's absolutely irrelevant. And another misconception is that 8:30 is some relevant time every single day. It's not. 8:30 is absolutely irrelevant if there is no 8:30 red folder news event. Okay, so you don't need to be marking out 8:30 if there is no 8:30 news event. So when you refer to gold, the only thing you need to be concerned with is USD red folder news events. And for energy, another misconception I see is that people try to pair USD red folder news events with oil. It doesn't affect oil. Oil has its own economic calendar. It's the energy calendar, and we're only referring to red folder news events within that calendar. So some pretty simple stuff, but you need to understand how to filter the economic calendar. You're going to have, these orange, yellow, and white news events that are absolutely irrelevant. So the first thing you're going to do is log on to forexfactory.com, right? This page is going to be pulled up when you go to calendars, and you're going to click this little, you're going to toggle this little green filter icon. When you press that, this is going to pop up. And now whatever asset you're trading, if you're trading Euro JPY, then you're going to click Euro JPY and unclick everything else, right? If you're trading indices, the only thing you should have checked is USD. And then for any market that you're trading, unclick all of these, unclick orange, yellow, and white. It's absolutely irrelevant. Apply the filter, and you should have something like this, right? Where it's going to show all the news events laid out for the week. And this is going to be your roadmap, right? Now, a caution protocol is you never really want to be entering before NFP, CPY, or FOMC press conference. Now, this is before, the driver within the same day. I don't have a caution protocol for entering, before, the day, the news release day. So, like, let's say NFP is on a Friday always. I will still trade Thursday, for example, but I won't trade it prior to NFP within the same day. Okay. Now, it's very specific when I do, and it requires a specific framework, which you're going to see a little bit of that here. So let's move on. So now, how to apply the energy calendar, because a lot of people don't know this. So same thing, Forex Factory. But you're going to click the energy calendar here, and you're going to do the same thing. You're going to toggle this filter icon and unclick every checked box and apply the filter. You're going to have something like this. So this is your energy roadmap. Now, one thing that we must go over briefly is some framework, because you need to have a decent understanding of framework to actually anticipate or apply, drivers to framework, right? So pretty basic things. What do we trade away from? Is some sort of manipulation, and we trade towards failure swings, right? Or we trade away from these this manipulation, right? And trade towards these failure swings or any objective, right? So mapping out relevant swings, this is pretty important. So relevant swings are just spaced out highs and lows, right? So this low is not a relevant swing because it's not spaced out, right? So this becomes a failure swing, right? Failure swings are just close proximity highs and lows. So see how these highs are in close proximity, right? Those are failure swings, right? Like low resistance liquidity. See the space between this relevant swing and this relevant swing? That's what creates, right, important highs and lows in a sense, right? So when you engage with these levels, this is where we want to see, that phase of price of reversal. So, right, when we engage with a relevant swing and we manipulate it, this is what creates a protected swing, right? When we manipulate a failure swing, we're not referring to that as some sort of relevant level, because if you manipulate a failure swing, then there's still a reason to return back to this area, right? Because this is still a failure swing to this low, right? So this, when you have a failure swing like this, you want to manipulate all relevant lows within that area. So there is no reason to return back to this low, right? Because if you manipulate everything within the area, there's no reason to return, and this is where price will actually expand away. Now another thing we can combine a manipulation with is with SMT. So when you manipulate a relevant low, and we see an SMT there, this is the ideal scenario, right? We don't care about SMT with failure swings. Even if there's an SMT here, I don't care, right? Doesn't matter. We use SMT at relevant swings, right? And this is would also create a protected swing on both assets, right? You have to view this as manipulation over here because this is showing relative strength, right? Where the correlated asset did take this low out. Now, when we engage with these relevant swings, we need to understand, signatures of price. We need to understand what a reversal signature looks like, right? Because if you fail to manipulate a relevant swing and we continue, right, or we just fail to manipulate, they're probably going to continue, right, and go to the next relevant swing. So when we engage with that level, ideally we see, this is really the first step, is a swing formation, right? But within that swing formation, I want to see this signature ideally, right? Expansion into the level and expansion away, confirmed by a CST. So it's expansion met with expansion, or that V shape. I'm sure you guys heard this a lot, but this is the reversal signature that you ideally want to see, right? So this is what it looked like. If this is a relevant swing here, and you trade into it, have an SMT, and price expands away from that, confirmed by a CST, that is the reversal signature I'm looking for. But there's two types of reversal signatures, right? What if we trade into a relevant level and we consolidate on like the lower time frame or something? Then this is where I would like to see an AMD reversal. All right, there's two types of AMDs. There's AMD continuation and AMD reversal, right? So price has to manipulate this level. If it doesn't manipulate here, we're just obviously not, we're just expanding through it. We don't want to see that. So when we engage with this, consolidation high, you're going to see the same thing, right? Expansion with expansion, and that's the signature that we want to see, right? And like I said, this will be made up from a swing point. So you can imagine this is candle 1, candle 2 manipulation, and then candle 3 expansion, right? So when you engage with a protected swing, when you think about key levels, like I said, I specifically am an intraday trader, really. That's really what I get a lot of my buys from, is intraday development. And I focus a lot of small details with how the daily range is forming, right? I'm much more detailed in my approach than most people in that sense. So the key levels that I'm referring to are, right, when there's an established low of day put in, like a relevant swing that puts in the low of day, these are the key levels that I want to be trading away from that level. This is when I, use order blocks or fair value gaps. It's away from a protected swing towards a drawn liquidity, right? Because we should expand away from manipulation, right? We shouldn't return back to this protected swing. What supports expansion? Order blocks and fair value gaps. So these are the ones that become crucial, and these are really your invalidation levels for continuation, right? Because if you fail to displace away from this order block. If you fail to find support here, this protected swing is not likely going to hold, right? Because of a couple of reasons, right? When we think about expansion signatures, right, we don't make these super deep retracements, so I don't even want to see that, right? But that's a topic for another video. But yeah, to put it simply, I want to use order blocks and fair value gaps on the 30-minute 1 hour to support intraday continuation away from the low of day. Now, when we engage with a protected swing, a relevant swing, or any key level, right, we're going to refer to a swing formation, right, the fractal model, on the 1 hour and 30-minute time frame. All right, this can be forming the low of day. This can be for intraday continuation. This stays the same. It's the hourly or 30-minute fractal model. Now, how to confirm a driver continuation versus reversal. So this is when we already hit a key level, right? We want to pair it with continuation. So let's say we already have a reversal put in, right, with shown by a CSD, right, or confirmed by a CSD. When the driver opens up and trades away from that CSD, this is how you confirm narrative, right? Now let's look at a couple different ways where the driver will open, away from the high of the day, right? Trade towards that CSD or that reversal, creating an opposing candle. When we close through that, that's what confirms it, right? That's what confirms the driver being in continuation phase. Now, what if there is no high and low of day established or no key level traded into? This is when we want to see the driver trade into that key level, and then we want the driver to create that CSD, right? This would be pairing it with a reversal. Now, driver pairing, continuation versus reversal. Now, this is something that you're going to see that's very, very, very consistent in the market, and something you see almost every single day. So this is the if then scenarios, right? So if a reversal has been put in prior to driver, then we want to see a driver continuation, right? Because if we put in a reversal, we expand away from that reversal. So when the driver starts to expand away from that, shown by these continuation signatures, right here, that confirms narrative for us, right? If a reversal has not been put in prior to driver, we want the driver to go create that reversal, right? If a driver has failed to reverse, then that is invalidation, right? So let's say there is no established high and low of the day, like in this scenario, and the driver trades into it but fails to reverse. That's invalidation to the whole profile, because if the driver doesn't reverse, then I'm not expecting 12 p.m., 1 p.m. to reverse. Those are irrelevant times of the day. I want to pair my manipulation or reversals with a driver for higher probability, right? And you're going to find a lot of times if the driver fails to do that, then we're just going to chop for the rest of the day, or you're just wrong about your bias, right? So if 8:30 manipulates, right, then 9:30 should continue, right? So this is specific to indices. If you have a two-stage driver, where if you have red folder news event prior to 9:30, that's always a two-stage driver. So if 9:30 manipulates, then 9:30 should continue, right? When you think about 4-hour profiling, within the 6 a.m. candle, if that reverses, then 10 a.m. should continue, right? When I think about New York reversal, I want the 6 a.m. to reverse. I don't want the 10 a.m. to reverse. It's a little specific when I can trade the 10 a.m. or view a 10 a.m. reversal as high probability. That's when the driver is trading to a reversal point, right? It's very different if 8:30, 9:30 trade into a reversal point, fail to reverse, versus if they just trade into a level and then maybe get there late, in the 6 a.m. candle, maybe like 9:50 or something, and then 10 a.m. reverse. It's a lot different. Now, same thing here, 9:30 manipulation, then I expect 10 a.m. continuation. So this is really the whole logic behind my 4-hour profiling, right? You see a lot of people use it, but this is the real reason why, right? When you see 10 a.m. continuation a lot of times, is because you have the previous 2 sessions prior to 10 a.m. You have the drivers prior to 10 a.m. majority of the time. So there's going to be some established higher low of the day before 10 a.m. So 10 a.m. a lot of times is just continuation, right? So now let's get into continuation or driver continuation. So this is when prior to the driver we hit a key level. This is an example of we create a protected swing, right, prior to the driver, right, confirmed by that swing point, right? So it's either driver opens up within that swing point, expands away, you can confirm it with a CSD or whatever, or maybe there is no swing point, that's fine as well, as long as we have some sort of continuation signature that will be shown right here, right? So here's the 5-minute, 3-minute confirmation of the driver trading away from this low, right? And that would confirm that this is a true reversal, right? Over here is another example of continuation. So these are both examples of continuation, but this is away from manipulation. This is an example of those key levels that we talked about, like fair value gaps, order blocks, away from some sort of manipulation, right? So maybe prior to the driver, we've already started to expand away, and we hit a key level prior to the driver. So like a fair value gap, an order block, then I want the driver to expand away from that, right? Because I want these to support price higher, right? So it's an example of maybe you have a swing point already formed before the driver. Well, I want price to expand away from that swing point, right? Because the markets cannot reverse without a swing point. So if you already have a swing point from a key level, we should expand away, right? When's the perfect time to expand away? Around those drivers. So it's an example of prior to the driver, we don't have an established higher low of the day, or maybe you're just in a consolidation. Well, I want the driver to go trade into that relevant level, that relevant swing, and manipulate it, right? So I can pair a reversal with the driver. So that's what that would look like. The driver opens up into these feather swings, creates that candle 2 closure or swing formation, and prints that reversal signature. Maybe has that 5-minute CST, 3-minute CST, whatever you require, and then expands away, right? So now you're pairing a reversal with the driver, which is higher probability, obviously. So this is an example of driver manipulation, but within daily continuation. So pretend the low of day is in, we've expanded away, and the driver just opens up within expansion. This is when you're going to get, a lot of times, some sort of retracement, right? And what do we want to trade continuation from? Fair value gaps, order blocks, right? So this is when I want the driver to go trade into one of those levels, right? And then reverse. So here's an example of, we're opening up an expansion. I want the driver to, retrace into this level, create that swing point, and expand away. Here's an example of driver invalidation, right? So again, we're opening up within, we can't trade it away from anything essentially, right? When we open the drivers. So I want the driver to go create something to where I can trade away from, right? So here's failure swings. If the driver fails to reverse from these failure swings and fails to manipulate it, well, then that's invalidation to the whole profile, right? Because then it's just going to go to this relevant swing. So every time you open the charts, there's always going to be an invalidation level every single time, essentially, right? You're either opening up near some key level or around failure swings, etc. So this is an invalidation for continuation, right? This is an invalidation for manipulation low of day. This is an invalidation for daily continuation. Maybe you have a low of day, put in, and the driver fails to, expand away from that low of day, right? That's an invalidation that this is probably not the low of day, right? Or this fair value gap is not going to support price higher, right? So I want the driver to go trade into this fair value gap and put in some sort of reversal. Now if it fails to do that, this is going to fail, and likely we're just probably going to chop around, right? This is an example of maybe you put in a, some sort of protected low within the continuation, right? So here's a protected swing, price trades away from the protected swing, and then we form another relevant swing, right? Look at the space between these lows. We manipulate it prior to driver with a CST prior to driver, maybe on the 30-minute hourly. Then I want the driver to expand away from that, right? But if it doesn't do that, this is clearly not a protected swing, and probably maybe even this is not going to be low of day, right? So ideally, we really want the drivers to expand away from these relevant levels. Now, one thing we must understand is protraction versus expansion phases. So within a daily candle, like I said, you're going to have a protraction phase and an expansion phase. The protraction phase is just the open low of the candle, right? Forming the wick of the candle, so under the daily open, right? This is ideally where we want to see a protected swing form. It's to form the low of the day, right? Because if the wick is formed from a protected swing, then we can assume that price will expand away from that and create the body of the candle, right? Now within continuation, right? Within expansion at least, we want to be trading near these close proximity key levels or protected swings, right? So within expansion, you can also form protected swings to trade away from, and this is always ideal, right? It's when you have a protected swing within daily expansion. So now let's talk about protraction phase versus expansion phase, right? So this is manipulation. This is the most ideal scenario when pairing a driver with continuation, right? It's going to be within the protraction phase where the daily candle has yet to expand, right? You see how it's still within its wick, right? This is when the daily opens low, creates the low of day from that relevant swing, and we manipulate prior to the driver. So when you manipulate prior to the driver, what's the if-then scenario, right? Driver should expand away. Now this is specific when you are going to get a one-sided expansion, right? When the daily candle hasn't expanded, we also haven't expanded away from this key level, right? Because there's only one thing to do now. It's only expand, right? Because if you manipulate, we don't retrace, we don't consolidate, we should expand, right? So when you have a one-sided narrative like this and the daily range hasn't even expanded, what's the most relevant time where we would expect the daily to actually start to form that body of the candle, that expansion phase? It's around these drivers. So this is when you're going to get that one-sided expansion, no retracement, basically just expand. So if you guys saw my trade on Monday and Friday, NFP, and then Monday, I believe it was Monday, I traded before the driver. It's because of stuff like this. There's a little bit more to it with the SMT and stuff, but this is the main reason, right? We haven't yet expanded away from that key level. We're still in the protraction phase of the candle. So this is the most ideal scenario right here. So now we're going to get into, what if there is no low of day, high of day established? So we can imagine this is Asia lows or London lows in the protraction phase, right? This is exactly where we want to reverse from, right? And we can pair that with the driver, which would form the wick of the daily candle, right? Now this is the expansion phase. So what if, we form an established low of day? You want to trade away from that low of day, right? But price is just, prior to the driver, we expand. So if you expand prior to the driver, then, you can't trade away from anything, right? Because we haven't hit a key level. So this is that example where we can expect some sort of retracement if we expanded prior to driver. So where do I want price to retrace to? Some sort of key level, right? So here's a fair value gap. I want the driver to trade into that, put in some sort of reversal, so I can pair that, that driver with reversal and trade the continuation, right? As long as there's still a draw on liquidity, that's pretty important. So here's an example of prior to the driver, we reverse, right? Or we manipulate, sorry. We trade into some relevant level. So to form a low of day. So this can be a couple different things. This can be a low, this can be like a low, like a relevant low. It can be an order block or a fair value gap for price to form the low of day from. But the thing is, it hasn't yet reversed, right, from that key level. So maybe you just hit it right before the news. Well, this is where we should just expand away from that key level, right? So this is when I want the driver to just expand away, right? Because if we don't expand away from that key level around this key time, then that key level is not, some sort of relevant level, right? So this example of, we just hit a relevant level, or maybe price is just within a fair value gap or a, whatever. I want the driver to expand away. Pretty simple. So this is an example when prior to driver, right, we retraced into some level. Now this is within continuation. But it's also some sort of reversal, right, within the continuation. So we're retracing into a fair value gap here, right, prior, and we haven't yet reversed. This is the same thing as this, but it's within continuation of the daily candle, not reversal, not the protraction phase, right? So this is when we retrace prior to driver retrace and hit a key level. We should just expand away, right? There's no reason to go lower. There's no reason to consolidate, retrace more. We should just expand, right? Because after retracement, we're in a key level, then we should just expand, right? So this is when I wanted to see some sort of CSD. You can use a swing point. Sometimes some people don't use swing points. Maybe you don't have to use a swing point. Maybe you just need a CSD, and that can, you can pair that with the driver, right? So this example of within continuation, there's nothing to trade away from. So maybe we do hit a fair value gap or whatever, but we don't expand away from that swing point. So that's viewed as consolidation, right? So if you open up near, some relevant swing, right? This is a relevant swing. Look at this space between these lows. I want the driver to go and manipulate that to create a protected swing intraday, right? Or within that, expansion phase of the daily candle, right? So what if we already did that? What if we already trade into some relevant swing or protected swing within the expansion phase, right? We should just continue away from that, right? Now this is when I would just wait for like a 5-minute CSD, right, to confirm that driver expanding away from here. And that's how you pair a driver with this scenario. This is when prior to driver, we manipulate, right? But it's not forming a low of day, like I said. It's within the continuation phase or the expansion phase, right? So let's talk about a little bit about positional entries. I spelled this wrong. Great. Confrontations, whatever. This is confirmations. I can't spell, but this is when prior to driver we hit a key level and we already have that swing point, right? And markets can't reverse without a swing point. So if the markets trade into a level, right, we should expand away, right? But if we haven't expanded from the swing point, this is the ideal scenario, right? Now, to take a positional entry, you have to be in close proximity. The driver's open has to be in close proximity to some very like obvious or like bulky opposing candles, right? You need like a large range so you don't get wicked out. Does that make sense? And you also, it's very key that we haven't yet expanded away from that key level, right? Because this is like when I mentioned earlier, is the most ideal scenario is when we hit a key level or form a low of day or whatnot. We haven't yet expanded, right? This is when the driver will just have that one-sided expansion. So that's another very key thing, but you need to be opening up within a clear set of opposing candles, right? So the driver can trade into that or at least find support here and expand, right? Now here's like the same thing, but you're going to be waiting for or you're just going to have that higher time frame confirmation, right? So let's say the low of day is put in, we have an hourly CSD prior to news event. The news event or driver is opening near these opposing candles. It should find support here, right? So you can set an entry here. This is another type of positional entries. It can be within continuation. Maybe we create a low of day, expand it away, and then we're creating a propulsion block, right, off of key levels that should hold if this is going to be the true low of day, right? So when you get the confirmation that CSD and we're opening near that, then you could set a positional entry here now. Now with time frames, this is something you have to test. But obviously, if it's going to form a low of day, you probably want a higher time frame CSD. If it's going to be within continuation, I would pick either the 15-minute or 30-minute. Doesn't really matter to me. They're damn near the same thing. This is pretty much the same thing here, but this is just a protected swing within the continuation, right? And we're opening near these opposing candles. And you just set a limit at that. Or you can just market execute or set a limit at these opposing candles, anticipating that price will continue that expansion. Now, this is more of what I would do. It's the same thing as here. We're opening up near some higher time frame opposing candles, right? But I would wait for the driver to trade away from these opposing candles or trade into them, and on the lower time frame give me some sort of lower time frame continuation signature, right? So here's the opposing candles, right, which would create the wick of this candle here into these opposing candles. This opposing run here, right, which is trading away from the draw on liquidity, is creating opposing candles, right? When you close through that, right, that's what confirms the driver expanding away from whatever reversal this is or these opposing candles, right? And obviously we have that lower time from CSD, right? This can also be within a swing point as well. So you have this swing point that creates a CSD simultaneously in your train candle 4, right? So either or, we're just opening near these higher time opposing candles, which is always ideal, right? Now, one thing that's extremely important, especially if you're going to take a positional entry, because positional entries are automatically lower probability, right? Because you're anticipating, right? You're not confirming necessarily. So you're kind of just anticipating that price will expand away. Now, this is going to give you a higher probability when you have these targets still left open for price to expand into. This is something that's extremely important to my trading. I always have to have some sort of target open for me to trade into. So this is an example of price manipulating prior to the driver. So maybe forming the high of day, and we haven't yet expanded away from this high, right? We still have open objectives like failure swings, right? Low resistance liquidity is something that drivers will knife, they'll cut through whatever is opposing to that, right? And go straight to that draw on liquidity, right? It won't care about this swing low, it won't care about this fair value gap. It'll knife through that to low resistance, right? Especially if there's already some sort of reversal put in prior to that, right? Another draw on liquidity that's always good to have is previous highs and lows. Now this is really important to these drivers like CPI, NFP. If you have a previous high and low put in, it's always going to hit that level because price is not going to inside bar, right? Inside bar is a form of consolidation. When we think about consolidation, they're not going to happen around these drivers where there's a bunch of volume. We're generally going to expand, right? So we're not going to inside bar, so we're always going to take out the previous high and low. So that's like almost like a guaranteed target, to be honest. Another thing that's really good to see is the opening low of a candle. It's like a New York reversal where you're pairing out the driver here. So here you see the New York reversal, the open low. We're putting in, maybe we're pairing the driver with the low of day here, right? This is our reversal point. Whenever you look at the opposing side of the you know, of your range or whatnot. The opposing side of the reversal, that's a better way to word it. If there is session high still available, right? So unestablished high of the day, right? That's why we care about opening low first, right? When you think about expansion candles, they open low first, right? At least a bullish candle does. Now, when it opens low first and leaves session highs behind, this is always a great signature to see, right? Because there's, the high of day is just in the form of low resistance liquidity at the time. And again, we'll knife right through that, right? And create a new high of day. So this is something that's really good to see. So either one of these is really good to have. If you're entering prior to a driver, you want these to be intact, so the driver will expand straight to them. So that's all we have for this presentation here. Now let's get into some examples. I have 5 examples. Let's go ahead and get through these pretty quickly. So here we are on RB. So again, when I'm referring to oil, I'm referring to these 3 assets. So what you're going to see here is RB takes out this low, right, which is a relevant swing when I go to like the 4-hour time frame. Look at the space between this low and these lows. This is the next relevant level, right? I don't care about this low here because it's a failure swing. So price ideally manipulates this low. Now this is specific when we have kind of like a range here, and there's really is no relevant low within that range. You see how there's no relevant level within this range? These are kind of just small. I don't really care about these smaller pullbacks. When there is nothing there, then we're going to create one. So see how we retrace into EQ and it creates a relevant level and we manipulate it? That's how we're going to leave this range essentially, right? So what are we going to pair it with? This manipulation with an SMT and a driver. So if you look prior to 9:30, so we have 9:30 oil news. It's not 9:30 equities open. This is 9:30 energy calendar, right? When referring to the energy calendar. So here you see 9:30, prior to this driver, have we hit any key level? No, right? We haven't hit this relevant level. So we want the driver to go and trade into it in reverse. So what's the reversal signature, right? A swing formation. So here's 9:30 swing formation, or a candle 2 closure, and that V-shape signature, right? Expansion, mouth expansion, right? Then what do we wait for? A CSD, right? And then you can get on side with this move. What do we have for the opposing side? Low resistance liquidity, and this is when you will get a very sharp or expansive signature to your draw on liquidity, right? And this is 4-hour profiling, right? 6 a.m. manipulation, 10 a.m. continuation. So another misconception with the 4-hour profiling, which I'll make a video on. If you haven't seen it, you can watch my T-Talks video, but I may go a little bit more in depth. And one other thing is a lot of people think you need a candle 2 closure. Not the case whatsoever. Okay, that's actually absolutely irrelevant. So here you see at 6 a.m. trades into the level, but we trade into the level very late in the 6 a.m. candle, so it can't form a candle 2 reversal. There's not enough time. It also doesn't support expansion away from this level, right? So this is when 10 a.m. will just straight up expand, right? That's what we see here. So let's go on to our next example. So here we are on YM. This is something that I actually traded. Now let's go over something a little bit interesting here. So if you look at the previous day's close, we have Tuesday closing more of a bearish close. Over here we have ES, kind of like a reversal day in a sense. We're closing back within this candle's range. And over here we have a full-on candle 2 reversal. So we can already gauge strength this way, right? Where we have Tuesday over here on NQ is showing strength, right? It's closing back within this candle's range. YM is not. So all assets have this fair value gap. So what can we assume which asset would trade into this gap? Right? Probably the strongest one, right? So we can assume that NQ would trade into this gap, right? Which we want a divergence to form here, right? Do you see how far this asset is away from this fair value gap? I want NQ to trade into this gap and YM to not, and create an SMT here. So these are things you can start to anticipate with some experience. Now, this day has CPI. So prior to CPI, what did we not do? We didn't trade into a level, right? So I want CPI to go engage with this high here or this high and create that SMT. So that's what we see here, right? Right, if CPI manipulates, then 930 should do what? It should expand away, right? So here, what are we opening 930 within? This 30-minute CSD, right? So what can we expect? 930 to just straight up expand now. What else can we look at here? prior to this 930 driver, what have we not done? We haven't yet expanded away from this manipulation. We haven't yet created the body of this candle, right? We're still in that protraction phase. So what are you going to get? You're going to get a one-sided expansion. So this is why I took a positional entry here, right? So look what 930 is opening within. It's opening within a lower time frame swing formation. So here's that swing formation. And it's opening within a clear set of opposing candles, right? You need this clear set of opposing candles, or more sort of bulky opposing candles, so you don't get wicked out, right? So this is my entry right here. This is all posted. I took this trade, right? Assuming that we will just straight up expand, right? Because what do we have? Low resistance liquidity and the previous day's low, right? So here's that expansion. And that was my trade on YM here, right? So now let's move on to the next trade here. This is another trade that I took, right? Where we see, if I go to the daily chart here, we see Monday opening high first. We put in some sort of reversal, right? We have this here, this CSD here. Now a lot of people would think that this SMT here, if I go to silver, this is relevant, right? But this is what we'll probably go over in a future video about relevant SMTs and whatnot. So, and how to tell an asset is lagging versus not lagging. I think this is my drawing over here, yeah. So how do we know that this asset, this SMT is fake, right? Because a lot of people see this, you see a fair value gap, an SMT, a candle 2 closure, and they'll pattern trade this. But one thing we know about phases of price, right? We clearly have some sort of reversal and expansion away from that, right? We have a confirmation. Now, what do we need to see away from a reversal? We need to see continuation signatures, right? So here we consolidate. So expansion consolidation. So what is that? That's a continuation signature, which is going to tell you that this is likely a false SMT, right? Because if the strongest asset is failing to reverse, right, what does that tell you? That, you know, it's going to catch up to these lows, right? So that's just one thing about SMTs. There's a lot of things we can talk about with SMTs, but what's the ideal way to reverse from a consolidation? It's manipulation, right? When we engage with the key level, we're always looking for SMT, so we have an SMT there as well. Now, what do we see here prior to this driver? We have a reversal, right? We've already engaged this prior to the driver. So what should we do? What should price do if this is going to be the true reversal? Driver should do what? Expand away. That's exactly what we see here, right? Look at the 5 minute, or the 3 minute. We have the reversal signature, even on the stronger asset, okay? This is very key. And the 830 driver is right here, and you see it confirms these opposing candles on the 5 minutes. We have yet to trade into anything relevant, even on this intraday hourly low. This is how you know we're just going to expand, right, into these failure swings, and then beyond to these daily low resistance lows, right? So this is another trade that I took as well. All these are posted, and this is when you see, you know, true expansion, right? Now let's go on to our next example. This is an example that I also took. So let's just go over the daily logic here. So here you have Thursday manipulation, Friday expansion away, and Friday has yet to reach this daily high, right? Or the swing point high, right? If you manipulate one side of the range, you're going to expand into the opposing side. And Friday actually creates this opposing candle on the daily time frame for Monday to open low into, use as support, and target the previous high and this high as well. Now, if you go to the 4-hour chart here, you're going to see price opens low first, right? Creates a relevant swing. Look at the space between this low and maybe this low or this low. This is where we want to see manipulated, right? Because this manipulation is around the daily open, right? If you fail to manipulate this low, what are we going to do? Create too large of a wick, which doesn't support expansion, right? We're also opening low first, right? We're pairing this manipulation with an SMT. So if we have a manipulation prior to driver, what should the driver do? It should expand, right? We already have the hourly CSD. So as you see, prior to this driver, if I play it right here, not this candle, the next one, what did we already do prior to this driver? We already retraced, right? And if I show you the hourly chart here, if I show you the daily candle, what have we yet have done, right? We haven't yet expanded away from the low of day. We haven't yet created the body of the candle. This is when you're going to get what? A one-sided expansion, right? Because you haven't taken out the previous high or this high over here. So this is a trade that I took. You're going to see here. Like I said, I'm anticipating purely expansion, right? Because there's a couple reasons. So we're within the new week opening gap here. So if I show you, I don't know why it's not showing here. Maybe like over here. Yeah. So here's the new week opening gap. We have PD rate alignment, but also, like I said, we retraced prior and we hit a key level prior. So what does that mean? If we retrace prior to driver, we're already in a key level. The driver should just expand away. So that's what I'm anticipating here. This is when you see this expansion on the lower time frame. We manipulate this low. Again, this is being weird, but you're gonna see on this asset, we do indeed take out this low, confirmed by a lower time from CSD. This is what I took here, right? And now later on, I took YM, but I'm still gonna show you over here, because this is more so SMT stuff that why I took YM and whatnot. We're gonna see that this high got left open, right? This high got left open, so you're gonna see the price comes all the way back here. So I took a partial win here because I'm not expecting price to come back here, so I go break even, right? I'm not expecting price to come all the way back here, so I go break even on this position, and we have some sort of strength switching here with YM, which is a form of a confirmation of a lagging asset. So YM was a lagging asset, switches strength to catch up to NQ. So I took this 930 entry on YM here, but I'm just gonna show you over here because it's generally the same thing. Because prior to 930, what did? We retraced into a key level, right? We already have the strength switch in SMT, so I'm gonna show you this SMT here with YM. We already had this SMT where we see that this asset hasn't taken out the previous high. But now we're seeing strength switch. What does it tell you? This asset's catching up to the, the stronger asset. It's momentarily switching to bullish, the stronger one, to catch up. So that's how you know that this is going to hold as well. So you can really take either or, but I took YM. So I took like a half win and then a full win. And you're going to see that 930 should do what? It should expand away because we still have these, these highs available, right? Price is not going to reverse from these failure swings, especially with that strength switch. So you can also take this as well, right? Now let's go over the last example of today's video. Let's mark this one up together. So if we go into the week, we can really, I could really make a video a lot on framework, but what is the week opening near this relevant swing like, right? Look at the space between these lows, right? These are failure swings to this low. So the space between these lows, right, create a failure swing now. Or create a relevant swing. So price opens low first into this relevant swing and then manipulates it. Then what does that tell you, right? When you think about a bullish candle, what does it do? It opens low first, right? And if we put any reversal signature, if I show you here, this expansion, met with expansion, then what does that tell you, right? We are likely going to have some bullish week, right? If you're going to manipulate one side of the range, the weekly is already supporting that idea, right? So you have a higher time frame candle supporting a lower time frame model. So higher time frame is opening low first, supporting bullishness, creating the low of the week early on in the week. So on a Monday, we can have expansion into the failure swings, right? So if I go on ES here, it's a little bit easier to see. But prior to the Tuesday's open, we have some sort of lower time frame signature. Now, this is when I say like low key, like higher time frame candle closes don't actually matter. Like that's actually kind of irrelevant. What actually matters is phases of price, right? Because here people will not see this as a manipulation, right? But there's only one reason why this didn't close a candle too. It's because we engaged with this low, this key level, late in the day. So there's not enough time in the candle to reverse. This is when we roll over that idea of phases of price that we should expand away from this low. So as you see, like here's the daily open. We hit this low like at what, 1300. Like I said, there's not enough time to go create a candle two. Doesn't mean it's reversal. What confirms the reversal is if we continue the expansion away from this the next day, right? So that's what we see here. And a lot of times, if you manipulate late in the day, the previous day, and if you're not going to take out that previous day's low, this is when early on in the day, we're going to just expand away. Because like I said, if you manipulate, right, and you have yet to expand, when you're going to expand, right? Probably early on in the day, right? Because you don't really want to consolidate after a manipulation. We want to expand away. So if you haven't yet expanded, early on in the day, we'll expand. That's what we see here. 1800 is the low of day. Now within the continuation phase of the daily candle, what do we see prior to this driver? we see some sort of internal manipulation, right? What do I mean by internal manipulation? Here's the current low of day. Let me delete all this stuff. Here's the current low of day. Here's the current high of day, right? Our overall draw is this high of the week. This is the current high of the week, right? So when I say the open low of a candle creates low resistance liquidity, right? When it just straight up opens low, this is what I mean, right? There's no established high of the week. It's just 1800, right? You can fractalize this. So that's what we see here. This is our overall draw, right? For the day, because we know the price is not going to go like all the way up here. So this is a good target, right? We're also in the protraction phase of that weekly candle. But what I mean by intraday or whatever is within the current low of day and high of day, we have a manipulation, right? It's not a manipulation, protected swing within the protraction phase. It's within the expansion phase. So here's a relevant swing, right? Here's a relevant swing. Here's a relevant swing. And then here's obviously a relevant swing as well, right? We can always mechanically define this. And my students know that we can mechanically define even this, like anticipating a reversal here, etc., right? So you see that we manipulate a relevant level prior to the driver, right? And we haven't yet expanded away from this into this draw or this draw up here. So what are we also doing? We're opening up that 930 driver within these opposing candles here, as you see. So you can set a limit here, or we could do what, right? We could wait for the driver to do something like this on the lower time frame. So it's exactly what happens. Now I took this on NQ. I took this on 2 accounts. So I took this on like prior to the driver, right? Because you had this as well. There's a couple of reasons why, but this I took on top step, and another one I took on apex. Now, if you see here, prior to the driver, would it be in on the lower time frame? Kind of have this expansion on the lower time frame. So you see these smaller body opposing candles. You can't anticipate the driver to expand away from these, right? It's a very shallow retracement, right? We want that larger, bulky opposing candle. So you have to wait for the driver, right? And what do we want to wait for? That continuation signature, right? We sweep out this low, which is even a lower time frame relevant low. Look at the space between these lows, right? So this is the most safest and ideal scenario right here. Is the driver is expanding away from this internal manipulation to get to these draws on liquidity, right? Whenever you have a draw on liquidity, you always want to be trading away from a protected swing to get towards that draw on liquidity. That's really all trading is having a target, hitting a key level. You want that key level to be protected, form a swing point, and you expand away, right? So here is the entry that I took. We can ride it all the way up here, right, to our relevant level, which is the current high of the week, right, which is unestablished high of the week, right, because this is 1800. So that's another trade that I took, and I'm going to wrap the video up here, guys. I hope you enjoyed. Leave a comment if you guys like this presentation style. If you guys really want, if you guys get me to 10K subscribers, I know y'all can do it. I will create a whole boot camp on pretty much covering everything, right? And I think that would help a ton of people. I'm going to give a lot of free information for free to help you guys out. But yeah, drop me a follow, drop me a like, etc. And hopefully you guys enjoyed, and have a good weekend.